famously known for making multiple 8 figures from the crypto market.
When you're trading FX, you are trading against hedge funds, quants. The market is so laser efficient. You have to grind out an edge. Crypto, it's so much more unsophisticated. There is a lot more peer-to-peer trading. On some of these altcoins, like I can move the market with my entries.
With the bull market in full effect, how does a professional crypto trader position himself, and what does he see as the future of crypto? In this episode, we explore the risk management strategies needed to be a crypto trader and how crypto trading compares to futures or Forex trading.
The potential that you can have in meme coins is insane. So it's not something you should ignore. But the problem I think a lot of people have is they're just... When crypto is cooking like it is right now, there is no other market that you will see this amount of volatility. It's not even close. If you are making money in FX, I'm very confident you can take your same strategy. You can apply it to a crypto chart and it will work. We're in the business of volatility. That's all you need to make money. Wherever that volatility is, that's where you go. This is where the volatility is.
Crypto market is hot and a lot of people are looking to get in, but I want to understand the difference between buying at all-time highs as a silly thing and also the difference between a professional crypto trader investor versus a bull in a bull run.
As a trader, the easiest way to take advantage of this is
So the crypto bull market is well upon us, and with opportunities left, right and center, why not utilize other people's money instead of your hard-earned money? So introducing to you the world's first crypto prop firm, Bitfunded. And they've partnered up with an exchange to bring not only the world's first crypto prop firm, but actually a prop firm that has an exchange-like environment. Imagine as if you're trading on Binance. With all the benefits that prop firms bring, with the leverage you can have, or hundreds of thousands of dollars in buying power, utilizing other people's money, so your total risk is just a couple $100 max, or as cheap as $79. And with the special offer that they have going on right now for you as a Titans of Tomorrow viewer, if you buy 2 prop firm accounts, you'll get a 3rd one for free. So click the link below this video to head over to the Bitfunded website and start to utilize other people's money to benefit from the crypto markets whilst minimizing your downside. Ladies and gents, welcome back to another episode. I'm joined by a crypto legend, I want to say. I found out why he's called Trader Mayne, but let's maybe keep that for another time. Thank you for joining all the way from Vancouver.
Thank you so much for having me. I know it's a little late here, but I'm glad we could make this work.
We're both flying out tomorrow, so we made it happen. So right now, the crypto market is hot, and a lot of people are looking to get in. My initial assessment as a non-crypto guy as well, is very easy to be a bull in a bull market. And if you buy and as you said, you're throwing darts and anyone can make money. But I want to understand the difference between buying at all-time highs as a silly thing versus, but the longevity of the future of crypto, and also the difference between a professional crypto trader investor versus a bull in a bull run.
Sure. So, I mean, all-time high is only all-time high until a new one is made, right? So I do think that you have to look at things cyclically. The market does go in cycles, crypto at the very least. So we will make continuous all-time highs, but once we breach that previous cycle's all-time high, so in this case, it would be 2021, we capped out around 69, 70,000. Usually, in my opinion, that's something that happens later on in the bull run. That's not the bull run's just getting going. Like if you're buying at 100K, you're not early, like to say the least. Doesn't mean we can't go to 150 or 200, but you have to keep in mind, we bottomed 2 years ago at 15,000. So
and that's when the bull run began, technically.
Yes, right? Yeah. So no matter how you slice it, we're up a lot already. I think what happens now that we're making all-time highs, and you're already seeing this even if you're not in crypto, the news is picking up on it. Your friends and family who might have thought you were crazy a few months ago are now saying, hey, now is a good time to get back in. These are not things that happen early on. Doesn't mean it's over, but in my opinion, we're definitely well into this cycle now. In terms of the difference between, being a genius or a bull in a bull market versus a professional trader, really comes down to how much you keep on the way back. A lot of people make a ton of money on the way up. A lot of people will make more money than I will on the way up because they're optimists. They believe it can only go up. It's never going to end. The music will never stop. But when the market dynamics change and we start to go down and we see one of these typical crypto 60, 70, 80% plus drawdowns, how much do you keep? Did you actually cash out any of that money, or was it just all unrealized money and you were counting and spending it in your head, and then the market pulls back and all of a sudden you're left holding the bag, is what they say. So that's usually how I determine whether or not someone's like, maybe getting lucky, and there's nothing wrong with that, but how much do you keep of that money? How much do you realize at the end of the day?
when it comes to kind of understanding, we are at all-time highs, but it could shoot a lot more, or this could be it. We obviously only have a few things to go off, and one is like how much did previous all-time highs stretch out compared to the preceding. But then there's also like maybe even geopolitical factors, the rate of quantitative easing, how fast they're printing, because some of that money flows back into crypto. Uncertainty in the world, inflation, interest rates, all these things probably have an effect. How are you anticipating, or let's say assessing, first of all, what happens next from here?
I think this is by far the most bullish macro background crypto has ever had.
Okay.
We have a president in the US who's going to be coming in who has said he is pro-crypto. He is appointing people in his cabinet surrounding him that are pro-crypto people. We have the ETFs now for both Bitcoin and Ethereum, where you have the likes of BlackRock and Fidelity buying millions and millions of dollars of crypto every single day. I think there's 1.1 million Bitcoin in the ETF basket now. Someone can fact check me on that, but that's what I saw earlier today. I believe that's the correct number. That's insane. There's only 21 million Bitcoin in total. So that to me is just bullish. To your point around kind of quantitative easing, I mean, what is going to happen with the stock market, I think matters. I view crypto and Bitcoin specifically very much as a risk on asset. When the market is risk off, I don't think a lot of people are clamoring to put their money in crypto. That being said, it's a much higher beta risk on asset. If you look at the COVID crash, Bitcoin and the S&P 500 were basically lockstep. Just Bitcoin was more volatile on the way down and much more reflexive on the way back up. So I think if you have a bullish view on the S&P 500 over the next few years, that's also bullish for crypto. But I've heard a lot of people saying we're due for a recession. We're due for a pullback. I think the S&P's it's over 6,000. NQ's also, the NASDAQ's also constantly making new all-time highs. So I think right now this is as bullish, as good as it could be. But that can change, very quickly, as you know. And in my opinion, we are risk on right now. We're a risk on asset. So if that changes, I do think you got to be, aware of that for crypto as well. Could see some sort of pullback.
In general, crypto is kind of seen for the people as their way to be anti-government or anti-system, anti-matrix, and they kind of use it as it's not controlled by anyone, it's decentralized, and there's a blockchain, there's proof of everything. So that gives it a very, let's say, not friendly for governments. And as you were saying, Canada doesn't even allow Binance. A lot of countries have banned crypto. And there's a reason for that, because a lot of money in the crypto market naturally is going to be drug money, black money, money laundering, criminal activities. I don't want to say a sizable portion of that is through crypto. Therefore, governments don't like it because they can't track it. So when you do say like Trump is coming in and he's pro-crypto, why do you think that is, and what does that really mean?
So I think crypto's beginnings were very much anarchist, right? It's, screw the system. I don't trust the banks. I don't trust the government. I want to control my own money. And really the white paper of Bitcoin, the whole idea is like, how can we have a peer-to-peer financial transaction without a middleman? I don't want to have to go to the bank and give you a check to buy your car. Like, I want to just be able to send you money. And what you can do with blockchain is you can verify everything. It's on the blockchain forever. It's immutable. I think early on that was the kind of, view of crypto, and a lot of crypto pundits were anti-crypto. They, Elizabeth Warren in the States is one of them. She'll say the same thing, right? Oh, well, it's drug money and all this stuff. There is way more illegal activity going on with cash than there is with crypto. It's not even remotely close. And if the government understood that blockchain currencies can be tracked very easily through the blockchain. That's why these scams that you see in crypto, they always get to the bottom of it, because you can only wash the money so many ways. At the end of the day, it's traceable. And if you're apt enough to go through and connect the dots, they'll find out where that money was sent, right? Or who touched it. So what I think is bullish about what Trump is doing, and what we've even seen other countries begin to do. El Salvador has created a Bitcoin strategic reserve where they've been buying Bitcoin consistently and holding it as an asset within the country. And they are up massively on their buying over the last few years. Michael Saylor, MicroStrategy CEO, has been buying it and keeping it as an asset on the balance sheet. So Tesla bought a bunch of Bitcoin, kept it as an asset on the balance sheet. So now we're starting to see this more mainstream adoption. Trump has hinted that they'll potentially in the US have a Bitcoin strategic reserve. Does that mean they're going to buy new Bitcoin, or maybe they will just basically take the assets that the US government has in crypto because they've seized Bitcoin from criminal activities and things like that, and they'll just say, okay, we're now just going to hold this. But regardless, countries holding Bitcoin, companies starting to hold Bitcoin, putting it on their balance sheet, to me, that's all very bullish. However, it is kind of hypocritical to the beginnings of crypto, where it's like, okay, if we have the governments buying it, countries are holding it, you now have like Michael Saylor owns a ton of Bitcoin. The ETFs, BlackRock and Fidelity, now all of a sudden own a large amount of Bitcoin. Have we almost lost a bit of that decentralized, distributed supply kind of narrative, because all the people that we were rallying against are now involved and they happen to, corner the supply. So we'll see.
I want to understand, for example, when you see gold, let's say, it's usually a safe haven where money goes towards, and there is kind of underlying value there. And I'm not talking about the cost of mining it, but there's a sense of utility and something physical. When it comes to Bitcoin, okay, there is a cost of mining it. I don't think that necessarily reflects value. Let's say value is just simply what someone's willing to pay. But I want to understand, why is Bitcoin number one, and why people still believe it will be number one? Because yes, they have the first mover advantage, but maybe not the most efficient in terms of sending money. Maybe the volatility isn't a good, well, when you look at the definitions of money, it needs to be divisible, it needs to store of wealth and XYZ. Bitcoin doesn't meet all the criteria that money would. But they have that brand value, like an Apple, like an Amazon, where that may hold it. So why is Bitcoin number one?
It's like gold to silver, right? Like there's been this vying for number two. I think Bitcoin, the main thing is its scarcity. There's only a set amount of Bitcoin ever to be in existence, and soon there will be none left to be mined. There's been a large portion of Bitcoin that has been lost over the years. Just, you could have, I've lost Bitcoin. I've had, ledgers. This is, years and years ago, where it was an immaterial amount of money, where I'm like, man, I would really like to find that little USB thumb drive with $100,000 on it. So there's an amount that's been lost. There's that scarcity aspect. It is the first mover, but in terms of like use cases, there are dozens of better coins. XRP is one that seems to be talked about a lot in the banking system because of how fast it is. Maybe it will replace, Swift payments. Ethereum and Solana are kind of the 1A and 1B in terms of, people are building on these blockchains. Other coins are launched with this blockchain as the base, other applications. So I believe, in my opinion, the fact that it was first, the fact that it was scarce, and the fact that it's now had a 15-year track record of, going up and to the right, is at the end of the day, you're not wrong. I mean, it's people's perceived value, but I think it's got that lindiness. It's got that staying power. It's been around. And now that we have so many large holders who are proven they're not going to sell, the supply is not going to move, it just becomes kind of a race to, own even just one. The idea of owning one Bitcoin didn't seem so crazy a few years ago. $100,000. Now the barrier to entry is extremely high. And what we've seen through each one of these bear markets is the floor always goes up. People like to look at all-time high. It's higher, it's higher. I like to look at the floor. How low did it go? Right? So in 2013, the lowest it went was like 200. 2017, excuse me. The lowest it went was like $200 or $300. Okay. 2020, the lowest it went was 3,000. This most recent bear market, the lowest it went was 15,000. So let's say we go to 150. Where's that new floor? Is it at 40 or 50 grand? It might seem like a long way off the top, but if you're still multiples higher than the last floor, it's generally a good thing.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. In general, I hear this thing around of crypto where first Bitcoin and some of the majors move first. And then as those people take profit, then the liquidity flows around to the rest. And I guess eventually trickles down to meme coins. What is that realistic flow of money around the crypto markets? And how are you using that to your advantage right now?
So in previous cycles, it was a lot cleaner. You would generally have Bitcoin run, and then you'd have what's called the large caps. So the large caps are the major altcoins like an Ethereum, like a Solana. These are multi-billion-dollar market cap coins. Then it would flow into the mid caps, which are kind of those second tier of altcoins. And then the low caps are your meme coins and your stuff that is a lot more illiquid, smaller size, easier to move. And that was what was viewed as the flow of money. Bitcoin was kind of the tide that would raise all ships. And then that money would then flow elsewhere. I found this cycle has been a little bit trickier because we've just had this constant bid on Bitcoin from the ETFs, where there's just this passive flow of money every single day going into crypto. Bitcoin has just remained resilient and very strong this entire way. And money has just kind of moved around almost like hot potato. This sector would get crazy. First, it was AI coins. Then it was animal meme coins. So funny to say this in like a professional sense, but animal meme coins. And then it was the artificial intelligence meme coins. And then it's, this next thing that's going to go. NFTs are now starting to get hot again. So it hasn't been as smooth as it had previously. You used to be able to actually kind of time it where Bitcoin would rally and then you would see it just looking at the chart go sideways. It would range. Doesn't mean it's going to dump, but it just would stop aggressively going up. And then you would see Ethereum take the lead. As a trader, the easiest way to take advantage of this is you do cross-market analysis. So it's the same way that if you're trading FX, you're going to look at the dollar, you're going to look at Euro USD, you're going to look at GBP USD, then you might look at Euro GBP. And using all of those charts, you're going to determine a bias, which is the strongest of these assets. If I'm long biased, does it make more sense to long Euro or pound? You can do the exact same thing in crypto. I can look at Bitcoin, right? It's just Bitcoin versus the dollar. So if the dollar is rallying, generally we actually see Bitcoin correct. Not always, right? It's not always 1-to-1, but that can be a very good barometer. Well, you can look at Ethereum versus Bitcoin. And if that chart is going down, that tells you that Bitcoin is the more dominant asset. It doesn't mean that the market's not going up. In general, Bitcoin and Ethereum could both be going up, but Bitcoin's going up more. You can do this with all of your cryptos. And this is something that a lot of people don't do. If you're going to buy an altcoin, that altcoin better be outperforming Bitcoin, Ethereum, and Sol, or you're underperforming kind of the benchmark. And so that's what I do. And I've got lots of videos of this on YouTube of how you can compare your coins basically to determine what's the fastest mover. Where's the money flowing? Am I in the most kind of productive, highest beta asset?
When it comes to the perceived upside that you can have in crypto, I'm talking specifically now with the degen behavior, let's say around meme coins and so forth. And I am seeing certain insane things on my TikTok with regards to certain influencers and leveraging meme coins to their selfish intentions. As a professional trader who's made millions of dollars from the market, I want to say the correct way. What is your view on that side of the markets?
To me, it's like looking at penny stocks. People are trading like really crazy option plays, trying to get those insane multiples. Like it's part of the business. Okay. And it's something that you shouldn't ignore. And it's something that keeps people coming back. It's like the lottery, right? Some of these meme coins are literally like lottery tickets because you can put $1,000 into something and it can legitimately become $1 million. I've had several instances where I've put money into coins and they've gone up insane multiples. I've had money I've put into coins, I've sold, and then right after I sell, it's gone up insane multiples. I put I think $1,300 into a coin called Peanut. Okay, so do you know when they killed that squirrel? I don't know if you saw that.
Yes.
Peanut the squirrel. So I'm like, Peanut, this makes sense. This might go up. And I sold it like for a loss. I put that $1,300 in. I sold it for $600. So I took a loss of $700. A week later, Binance added that coin as a tradable asset. It went from $50 million market cap to $2 billion.
That's insane.
And I just posted this on Twitter today, my Peanut holdings right now would be worth $42 million. Now, would I have held it all the way? Absolutely not. But would I have held it a little bit of the way? So the potential that you can have in meme coins is insane. So it's not something you should ignore, but the problem I think a lot of people have is they're just gambling, right? You still have to treat it somewhat systematically. You could throw your darts. You've got to still know when to take profit. And at the end of the day, there is a bit of an edge you can carve out by being online and being in communities and seeing, who's talking about what. But meme coins very much to the average person is buying a lottery ticket. They're gambling. They're trying to hit it big. And some do. You only hear about the wins though. You don't hear about the people who are putting $1,000 into 50 different coins and none of them go anywhere, right?
Would you say the edge has got nothing to do with technicals or utility or white papers or anything fundamentals? It's just strictly consensus, culture, comedy, memes.
Attention.
It's just
They're really trading attention, right? So dog with hat was a meme coin that went crazy, and it was just a picture of a dog with a beanie on.
Yeah.
Why that was the thing? Chill guy. Have you seen the chill guy memes? Like, I remember seeing it on TikTok and legitimately was like, this is probably going to end up being a meme coin. And it went to $1 billion almost.
Well, when you say like $1 billion market cap, is that literally translate towards $1 billion worth of buying power?
No,
like
so
that much money flowed into the
that's
coin.
how much the market cap is. Like, that's how much the total value of all the coins are at that very moment. Liquidity is obviously a very different thing.
Yes.
You couldn't sell, like, even at $1 billion market cap, you couldn't sell $10 million worth and get that fill price. Exactly. So the liquidity is not there, but 100%, we're talking it's attention. Meme coins are also quite, it's first of all, crypto in general is quite unregulated. Meme coins is the Wild West. There are people who will nefariously launch coins and they will pay influencers to talk about it, and they'll hold a large portion of the supply, and they're running a pump and dump, right? They'll say, listen, you got a lot of followers. If you tweet out this coin, it's going to go up, we're going to sell, we're going to make off like bandits. Everyone's going to get wrecked. So that is huge in crypto, much like it is in penny stocks. There's penny stock caller groups where they can say, hey, this is a low float coin. Like, between 10 of us with 1 million followers, we can pump this thing a few 100%. So this is happening in droves in meme coins. So part of the edge is being able to identify what coins are organic and, it's a good meme. It's, people like this, the supply is distributed, versus, okay, this is very clearly, some entities have bundled 10% of the supply, and as soon as this thing goes up, they're going to nuke it on everyone.
I don't know if you probably have actually, like the CoffeeZilla exposes on Mr. Beast, Logan Paul. Even now
Tuah.
I was going to say, I don't want to say this on the pod, but thank you for saying it for me.
It's okay.
And then even this, like I saw a 13-year-old kid on stream cussing out the camera, rug pulling, like what's going on? But in general, like that's one portion of it. And without kind of going deeper to the regulatory side and all of that stuff, are you involved yourself? Like, do you take advantage of the opportunity, or do you stick to the larger market caps?
The 95% of the money I make and 95% of my attention is trading Bitcoin, Ethereum, and Solana, and other large caps, and angel investing within the space as well. I dabble in meme coins. I think it's silly not to, because the potential reward is so huge. But there are people, we call them trench warriors, where they live in this world and they're trying to catch that next 1000x. And sometimes they do. Some people are really good at it, but I think there's a lot more bodies on the way up to that summit than people like to, maybe realize, because it's social media. You see the highlight reel, right? Like, my trip to Dubai, on Instagram is going to look amazing, especially when I'm posting pictures when I'm back in rainy Vancouver. I'm going to still be flexing like I'm in the Lambo in the desert. You know what I mean? And trading social media is the same way. Very rarely do people share, their losses. But yes, I mean, every cycle we see more and more celebrities get drawn in. And the problem is they're doing it for a bag. They're coming in for a cash grab. They have someone reach out and say, listen, I can get you a couple $100,000, $500,000. Some of these celebrities, you would be shocked to see how little money they are taking to basically pump and dump on their fans and break the law. For many of these people are doxed American citizens, and they are knowingly or unknowingly pumping and dumping crypto on their fans. And sometimes it's for like an embarrassing low amount of money.
This Hug to a girl, let's say, I saw it reached $500 million market cap or something crazy like that. But how much, or even the Mr. Beast one and so forth, realistically, we see the market cap, but obviously that's not what they walk away with. Ballpark, what are they kind of selling their reputation for?
So she got taken advantage of fully. The guys who got her to launch the coin really did her dirty. She had no idea what she was really getting into. And I wouldn't be surprised if she made little to no money, maybe six figures, because a lot of these celebrity coins, they launch and they instantly nuke, right? Because it's a Ponzi, it's insider traded. They bundle the supply. As soon as this person sends out the tweet, they're just selling immediately. And that's exactly what happened here. I don't think she understands what she did. I also don't think she understands how serious it is. And I hope she has a good lawyer, because that's illegal. No matter what way you cut it, whether you are oblivious to it or not, what you did was illegal. So there's a rapper named Lil Pump.
Yes.
I think he got 10 grand to tweet out saying, hey, here's my token. And then they delete the tweet and they pretend like another. Like, it's kind of shocking how little forethought goes into it. And I do think there is a world where celebrities, it's not a bad thing to have celebrities want to be involved in the space. There are some celebrities who are very pro crypto people, and it's great. There's an NFL player named Russell Okung who takes his salary in crypto.
Same as Odell Beckham Jr.
Yes. So there's celebrities who are pro crypto, and I think that's a good thing for mainstream adoption, right? But the problem is you have these bad actors, and this is for any industry, right? And they're getting together and they're taking advantage of a lot of these celebrities. And there's not really there's still a little bit of a knowledge gap, I think, for people. Like me trying to explain what crypto is to my parents, like I eventually just gave up and I just bought it for them and I hold it for them. And it's like, you know what I mean? They're just like, I just want to own one. I'm like, okay. Cause I was like, here's a wallet and here's what the blockchain means. Here's how you, don't put this on your cell phone, mom. Don't take a picture of it. Like at a certain point, I understand there is a barrier to entry there. But a lot of these celebrities are not coming at this honestly. I think they're being told, hey, I'm going to get you 100 grand. You just got to tweet something out. And they're like, oh, that sounds pretty easy, right?
Let's get into the correct approaches now. So let's meme coins aside. There's also multiple ways to interact with the crypto markets where you can have long-term investing, and that can be a whole strategy and a discussion on how you diversify your pot. Then there's the day trading portion of it where you're buying and selling. And then there's also, let's say, staking protocols and probably a long list of other things. So before we get into the best ones, what would you say those major categories are and how to interact with the crypto market?
Yeah. So, I mean, just buying and holding is the most obvious way that you interact with crypto. What's great about this day and age is you can do that in a variety of very easy ways. You can buy Bitcoin through ETFs now. You can buy Bitcoin on apps like Robinhood and Wealthsimple and Coinbase, which you can download from your phone, connect to your bank account. So it's no longer like you have to go to some weird site and you have to have some, it's become quite easy for the majority of coins, the big coins. Day trading, I treat it just like FX. I treat it just like stocks. I am buying and selling the market based on whether I perceive it to be bullish or bearish. Right now, because we're in a bull run, I think I'm much more long biased on crypto than I am short biased. We saw a huge wipeout over the last couple of days. To me, that was pristine buying opportunities. We saw a lot of coins that have gone up only for the last 2 months, fall 30%. I'm buying and I want to sell that, when price, makes new all-time highs and goes higher. So I treat that very much like a job. I generally trade around the market open hours. It does have that similarity to FX where there are sessions where the market is more volatile. Crypto is 24/7, but there's volatility around the New York session, the London session, the Asian session. That to me should only be done by people who know what they're doing, because the market goes up so much on its own. The likelihood of you outperforming a market that goes up multiples over, every few years, every 5 years is very low. I mean, you could buy Bitcoin for under $10,000 within the last 5 years. And now it's at 100. How many people have 10x'd their entire stack in 5 years? Very few. So to this day, the majority of my money is in spot. That's what we call it. Like when you're just buying it. Yep. And I will sell, but I'm not actively trading the ebbs and flows. It's more like, hey, I bought Bitcoin between 20 and 30,000 and I plan on selling between, I've already started taking some off here, over 100 up to, 150. And if it keeps going, I'll keep trailing myself out. And then there's the decentralized finance. You can interact with all these different blockchain protocols. People are launching new tokens on them. You can stake, you can lend. There's NFTs. There's so many. It really is kind of, they call it Web3, right? It's the next internet. I do believe it is the future of finance. So there's a lot of ways that you can make money in crypto without knowing how to trade at all.
I remember the last bull run, there's a lot of things that started to appear as the money flowed out of Bitcoin, let's say. One of them being, let's say, the NFT, which we can now just look back and say was a play on a greater fool theory. And essentially that's what it was, the last person holding the bag. Do you see anything brewing at the moment of such equivalence?
So, I mean, NFTs are having a bit of a resurgence, but only some of them. And to me, an NFT is an altcoin with a picture. That's all it is. It's an altcoin, but this altcoin actually is a picture. Like there's, you can have it on your phone screen or your Apple Watch, but we're seeing quality ones have staying power. So CryptoPunks.
Okay.
Those are already trading above 6 figures again.
Wow.
The Pudgy Penguins, right? They've been huge. They're trading upwards of almost 6. I think one Pudgy Penguin is almost a full Bitcoin for one. And that value of that Bitcoin is also obviously a lot higher as well. So Pudgy Penguins are trading high, and they've made toys. They're in Walmart. They're creating a community. So there are, and there's other NFTs that are like members clubs. So there's one called Boggles. They're on Solana. Yes. There's only a set amount of them. And if you don't own one, you're not in the club. Yep. And owning one gets you into events. You can get F1 tickets. You can get opportunities to go to this, investment opportunities. So there are cool applications for NFTs. However, a vast majority of them were, like you said, they spun up, quick rise, quick decline, and they're essentially worthless now. I think we're going to see a very similar thing this cycle with AI tokens, because we have so much talk right now about AI, artificial intelligence, and with ChatGPT, what Elon is doing with Grok on X, AI is going to be revolutionary. It already has become. I don't know about you, I use ChatGPT all the time.
I can't even explain to you how much I use it. Yeah,
like mine is trained. Like it knows me, and like I'm like, hey, write this tweet but better. Like make it sound smarter, And so it's phenomenal. But now you have all of these kind of flash in the pan. We're an AI coin. It'll be a coin. All they've done is add AI to the end of it. It doesn't actually do anything. Okay. I do believe, similar to NFTs, similar to crypto in general, there's going to be some that actually do kind of break get escape velocity and have staying power. But the vast majority of the AI tokens you see this cycle, I think, are going to be, nothing in the next one.
With regards to the strategies you were mentioning of whatever you were trading in your FX days, moving that over towards trading the crypto markets. Before we get into it, number one, I know you even off camera, you're advocating that towards me. Why are you an advocate of traders that kind of have a strategy and a predefined edge to actually deploy the same edge, but in the crypto markets?
When crypto is cooking, like it is right now, when we're in a bull run, there is no other market that you will see this amount of volatility. It's not even close. That's the main reason I tell people. 2, you don't need to reinvent the wheel. It's not like you need to learn something new outside of maybe I got to get on a different platform. Sure. But that's kind of pretty easy to do. But in terms of like your strategy, it will work. Price action, you use indicators, you're a pattern trader. If you want to lose money, of course, whatever you want to do, like it will work, right? If you are making money in FX, I'm very confident you can take your same strategy, you can apply it to a crypto chart, and it will work. And when the market is how it is right now, where we have so many different tokens available for you to trade 24/7, there's no closing, there's constant volatility. We're in the business of volatility. That's all you need to make money. Wherever that volatility is, that's where you go. This is where the volatility is. Another major aspect is the market itself and the participants in it are much more immature and unsophisticated. When you're trading FX, you are trading against robots, right? Like you're trading against hedge funds, quants. The market is so laser efficient, you have to grind out an edge. Like in reality, how many people make money day trading currencies? Like I know Instagram would make you think everyone, but check their bio. Is their Telegram signals group in there? That's where the Ferrari comes from. It's not from their signals. Most people, to grind out an edge in that market is extremely difficult. So like when someone can prove, like they've got a proven track record, I'm unbelievably impressed. I'm like, that's really hard to do. But most people can't, right? Most people lose money over the long term. Crypto, it's so much more unsophisticated. Yes, there's quants, there's trading funds, there's HFT, algos and things like that. But there is a lot more peer-to-peer trading. Not so much anymore on Bitcoin and the majors, but on some of these altcoins, like I can move the market with my entries, like not trading crazy size. And the market makers, the way that the market is trading, I don't know how to say it. It's easier almost. Like FX, you get more traps and you get more tricks and screwing about. It's almost easier sometimes in crypto.
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come. Well, when I do trade, I do trade FX. I'm really... The cornerstone of my strategy is going to be liquidity pools and sweeps of it, more because I know, as you're saying, there's so many participants that are losing money and a simple trend line. I see that gets swept. I see previous day high, previous week high. Like there's all these liquidity points and I need to confirm rejection and volatility time and these kind of things. But would you therefore say that because it's a bit more of an immature market, crypto, that the more simplified approaches of just a breakout strategy or a simplified support resistance would be optimal, or would more, let's say my approach that I have right now?
So when the market is extremely bullish, some of the most basic stuff works. Breakout, like ascending wedges and triangles and those, like that, it just works because it's a self-fulfilling prophecy. That's really what pattern trading is. If enough people think that this is support, it's support. And with crypto, because especially on some of the smaller coins, there isn't that sophistication. If there's enough people who say, well, this is a trend line, it's a trend line. That being said, I trade the same way as you. All of my entries are based off of reversals after taking out liquidity. That's the main essence of my strategy.
And within what? A Bitcoin and so forth?
I use it a lot more in Bitcoin, Ethereum, Solana. It works extremely well. I behoove you after this to go look at what just happened over the last 3 days on Bitcoin, Ethereum, Solana. We had a large correction on each of them and it took out basically all the lows of the last week. And it left a huge long wick, took out all the lows, closed as a picture perfect SFP. You go to the low time frame, you see the very clear change in structure. Okay, the bulls are now here. And today, 10% candle the upside. I longed last night, stop at the low. I'm like, easy, going to bed like a baby, like not stress. And that's how I do all my trades now. Because the market is bullish, I'm not putting as much weight on sweeps above old highs. I'm getting all my entries on old lows getting taken out. Previous day low, previous week's low. So I think the low for December is now in. We started the month, we went up a little. We've now taken out all the lows of the previous 8 days, 9 days of December. To me, we've reclaimed the monthly open. To me, it's up only the rest of the month. But yeah, I trade very similarly. I use liquidity sweeps. And in a ranging environment, if you look at Bitcoin from March till October, we basically were in a range from 50 to 70K. We'd go to range low, deviate, reclaim, I would long. We'd get to the mid range, I'd take off half. We'd get to the range high, I'd close. We'd break out, fall back in, I'm short. And I did that 6 times. And it worked until the very last one when it finally broke out.
Do you prefer, with the style of trading that you have, to be trading when it is in more of a consolidative or range-bound situation, or because when it's in a bull run, you can kind of just leave a runner and that can just compound over time?
This goes back to what I said earlier about keeping money. I make less money in the crazy bull run than most people because I'm taking profit, because that's just how my brain is wired. Like, okay, I risked 20 grand. I've returned triple that. I need to take some money off the table. Whereas the people who make the most money in crypto are people who just buy, and they just assume it's going to keep going up and up and up and up. And anytime it dumps, they buy again. And the people who are better at that, some of my friends are amazing bull market traders because they are just bullish. They think it's going to keep going higher. They're super aggressive with their entries, and they get rewarded because basically every dip we've had from January to March, every dip we had, within 2 days, we were higher. So you got rewarded for pressing the green button. Then it stops working. And that's when I do my best work. When we're going sideways or even going down, I usually make more money and keep more money than a lot of people. But what sucks is I'm in a market that trades very much aggressively, and it does pay until it doesn't to just kind of let it fly. But the way that I've kind of worked around that is I leave a runner, right? So I take my money off the table. I make sure I have no risk. And then I just use structure. Usually daily structure is enough where you can juice out, significant amount of money by saying, okay, we broke out. I'm going to now bring my stop up to this new low. And once that liquidity, like you'll see on the chart after, you'll check, we took out liquidity, that daily low is going to remain intact. I wouldn't be surprised if it's there for months, right? Okay. And then eventually we'll get a new one. Okay, I'll trail up, and that's how I let it ride. And then obviously my spot holdings going up.
With regards to FX, I'm heavily or only relying on price action, and I'm not a big fundamentals trader, so actually only technical analysis. When it comes to crypto, I guess you can do both, technicals or fundamentals. But then because you also have access to the blockchain and therefore the orders, is that any information for you and a way to derive an edge?
So this is another reason why I think people should explore crypto, right? Is all that kind of second and third tier data is available to you for free, right? You can see the order book. Mm-hmm. If I put in an order, I can see my order. I can see what's on the offer. I can see what's on the bid, and I can choose where I want to get filled. There's websites that will show you where liquidity is. There's resting orders above these highs. Oh. And that can be and a lot of people have entire strategies based on saying, okay, well, we've been going up and there's liquidity, sitting below this low. So if we purge that liquidity, I want to enter. You can see large entities setting sell walls to suppress price, and then they remove it. And then the breakout happens. So like all that data is available to you. On smaller cap coins, you can see who owns the tokens. So if you're in a meme coin, you can see it. Well, is 10% of the supply owned by one wallet? That's not good. If no one owns more than 1%, that's a good sign. So there's absolutely an edge to be had with that information. I know people who have all sorts of strategies using heat maps and liquidity levels and order flow. I don't use any of that. I'm similar to you. I only use the chart. My basic thesis is any sort of metric that you can look at, it's in price.
Price reflects that.
Yes, right? So some indicator that you have, that's just a visualization of volume and price in a different way. Yep. So the fact that you see liquidity, I see an old weekly high. So it makes sense that there's a bunch of liquidity there. You know what I mean? And I think simplicity has helped me a lot in my career. I think trading is one of those things where you can get so in the weeds, and then you see a guy doing something slightly different. Well, maybe if I just implement that, I'll start making money. Next thing you know, you've got this Frankenstein strategy you've put together, when the simplest stuff sometimes works the best. And that's how I started making money, is when my strategy was simple and I repeated it over and over and over and over again. Because if you don't have a system that's repeatable and you have data, how do you know what you do works, right? The problem that I think a lot of traders have is they're hopping between the new flavor of the week. Well, this guy does price action. This guy uses moving averages, and they don't actually spend the reps on the one thing. I liken it to sports. So you're from the UK, so I'll use football, as you guys call it. If you take all of your penalty kicks with your right foot in practice everywhere, and then it's game time and you're like, I'm going to go lefty. Like, do you expect to have a good result? Probably not. Trading's the same way, right? So I found a simple strategy. It works. And then I just got data. I've got thousands and thousands of hours of doing it the same way. So if it ain't broke, don't fix it.
With regards to traditional, let's say, Forex trading, everyone that I know that, as you're saying, it's extremely difficult to carve an edge, but those that eventually do after at least 3 to 5 years, I want to say, they are in the realm of single digit per month profits, usually low single digit per month profits. And therefore it becomes a game of capital where you accept, okay, I might just do 2 to 5% a month as a solid edge. You are outcompeting the S&P, you're outcompeting hedge funds, but then you got to scale your capital to satiate the dollar amount you want to make. With regards to crypto, what is that equivalent realistic gain that sort of people can see when they have actually found an edge?
Well, crypto is so funny because it desensitizes people to reality, right? So generally in crypto, a lot of people will make a lot of money very quickly. But when the market starts going down, they're not making any money. They're probably losing money. I do think there is very few markets that if you're a good trader, you can get a more consistent high return. I have people who I've seen consistently over the last year return 20, 30, 40, 50% on their portfolio every single month. And they're doing it over and over and over again. Now, is that sustainable over years? I have no idea. Is it sustainable because of the market conditions are? The difference generally though is they're taking way more risk. Like you're not returning 50% on your portfolio, risking 1% on a trade, right? These people are saying, okay, I have $1 million. I'm going to buy $500,000 worth of Solana right now. And if Solana goes up 10%, I've made 50 grand. That's amazing. Well, what if it goes down 10%, right? I trade much more systematically. So I do have instances where I will take outsized risks. And I think the environment we're in right now rewards that type of action. But as we get higher, that becomes riskier. The air is getting thinner. Early on in the bull run, you are absolutely rewarded to take massive risk because the likelihood of us continuing to go higher, you taking a buy, goes down, getting bailed out, it happens more often. But as we get higher and higher and the bull run kind of gets in the later innings, that becomes a lot more dangerous. But my basic trading strategy, I treat it like FX, like 1 to 2%. But the difference is like I'll aim for a 2R and it becomes 10R and I didn't even do anything. I just went to bed and it just happened to pump 15% overnight. You know what I mean? So when the market is cooking, I get a way higher return, double digits for sure. But when it's range bound or when it's downtrending even and the volatility subsides, I think it's a higher beta to FX. But if you trade like me and you're very risk sensitive, you're not going to be getting 50% returns on your crypto. I think that's insane. Anyone who's showing these crazy returns, they're not talking about the fact that they full ported, right? Like their entire account is at risk on that trade. And if they're right, they look like a genius. But if they're wrong, you can nuke 25% of your account and you just don't talk about it, right?
Yeah. When it comes to your kind of story, I want to speak around the word psychology, let's say, because you have not just had a bull run of a life. Let's say you've had a very crypto-like life where you've had a lot of money and then go back to bankrupt and building yourself back up and also transitioning between Forex and crypto. I want to hear your thoughts on overall just mindsets, the mindsets of a trader, the mindsets of a trader who ends up being an entrepreneur and just navigating this life.
Yeah, I mean, likening it to a crypto life is actually very funny. I haven't thought of it like that, but it's so accurate, right? Because I've had ebbs and flows. Yeah. I've had ebbs and flows. I've been rug pulled many times. I've had, when I first started, I turned very little bit of money into 6 figures. And at the time I was 22, 23, 24. Like that was unlimited money. When your only expense is beer, having $150,000 is infinite. Yeah. That's all the beer I could ever want for eternity. And then to lose that all and go from quitting my job, moving out of my dad's basement to getting a new job and moving back into my dad's basement, that's the bear market, right? I usually tell people in crypto, you will not, if you make money your very first bull market, you're doing a lot better than most. Most people, they'll make money on the way up. They'll give it all back. They didn't know they should sell. They were bullish too long. They got scammed. They did this. And that's kind of your learning ground. I think most people do a lot better in their second go. So if you got into crypto in 2017, okay, maybe you lost some money, maybe you survived. But then 2020, you're better prepared. And this is now my third bull run. So I've been able to extract a ton of money and navigate it pretty well. I avoided a lot of the pitfalls. Last cycle, I made a ton of money too. I did well, but I lost money on FTX. And that was unfortunate. That was a misstep. And that's something I've learned on. So I think that failure that you experience on such a routine basis in trading, like in most people's regular life, like, yeah, you fail at stuff, but not as often as a trader. Like as a trader, like you have weeks where every day you're failing. Like you're going into the market with a plan and you're just wrong. And that's the beauty of it, is like you can have all these ideas and preconceived notions about, well, because of X, Y, and Z, price is going to do this, and you're just wrong. And like learning to just like accept that, I think makes you a better person, and it gives you a ton of skills, and it makes you rock solid mentally in other aspects of life. Like why would I be afraid to try and launch a business that might not work when I get, dumped on every single day? Like my win rate, so I still trade FX, not as often as crypto, especially not right now, but I love gold. Gold's my favorite asset to trade. My win rate on my primary strategy, which is kind of like a swing strategy, a little bit day trading, it's less than 50%. So like I lose more than half the time. And most people are like, well, that's crazy. I was like, yeah, but when I win big. And when I lose small. And that has made me better in all aspects of my life, whether it's the gym, relationships, entrepreneurship, and of course, trading. And crypto is like pouring gasoline on the fire. Everything's hyper speed.
I think it's interesting to discuss loss, because in general in life, whenever you take a loss, let's say you fail an exam or whatever loss you have, usually the repercussion is I need to study more to pass that exam. So whenever you have a loss in life, it's usually a signal to like, let's do something about it so it doesn't happen again. Whereas as you're saying, in the markets in general, losses are supposed to block that response, which is I'm supposed to do nothing, assuming you have an edge. But also there were certain situations out of your control. Let's say the FTX situation where you lost millions of dollars. Talk me through that time that you were going through, where you came to the realization what's happened, and a significant portion of probably of your net worth has now been
huge.
What was that like?
So I sold near the top last cycle. Bitcoin was 69, 70,000. I got out well before the actual top. But I'd rather sell early and, than sell late, because selling late is the worst. So, I was in cash. I nailed it, right? I'm like, okay, I'm out. We're clearly in a downtrend now on the higher time frames. Now my thought process is, where is this going to bottom? Looking historically, Bitcoin usually draws down 80+% from high to low.
Okay.
And usually at the very end, the thing that finally puts in the bottom, something blows up. An exchange goes under, something crazy happens. And so I was sitting in cash, just waiting. Bitcoin's it was at 70, now it's at 50, now it's at 40, it's 30. And I'm getting ready to come here for the first time for our very first crypto fight night that we put on. And I'm so excited. I've never been to Dubai before. A bunch of my buddies are here. We're putting on this awesome event. And I had a few friends message me. They're like, I'm hearing rumors that FTX is having some solvency issues. And I'm like, that's crazy. Sam is on the cover of Forbes as the richest guy under 30. He's worth $10 billion. He just did a Super Bowl commercial with Tom Brady. The Miami Heat arena where they play basketball is called the FTX Arena. They're sponsoring an F1 team. Like, just didn't make sense. Like, yes, stuff can blow up, but like my naivety was it's too big to fail. Like, you know what I mean? Like the VCs and funds that invested in FTX are some of the biggest in the world. Like, they must have done their due diligence. Like, why do I have to? You know what I mean? And they've all got their money on there. So I just was like, yeah, it's going to be fine. And Bitcoin went to about 25,000. And I was legitimately boarding the plane, and I'm first time ever flying first class on Emirates, which if you want a reason to work hard, it's so you can afford to fly first class even one time. It is like, I don't want to get off the plane.
I was going to say then try Etihad.
I did as well. It's up there. Singapore Airlines also
I haven't tried that yet. Okay.
Peak. So I'm boarding the plane, and my buddy, who's pretty well informed guy, he's like, I think just like I'm taking all my money off just to be safe. And I'm starting to see at this point some FUD on Twitter. Like, people are questioning, withdrawals are taking a little too long. And Sam tweeted out, like, everything is fine. Like, don't ignore all the FUD. We're good. I'm like, all right, 15 hours in the air. I'm eating caviar. I'm living my life. When I landed, the next tweet I saw from him was, we are bankrupt. I log into my account, can't withdraw. Everything's frozen. So that was...
The news was delivered via tweet?
Yeah.
That's crazy.
I mean, they eventually just froze withdrawals, right? But he eventually just tweeted because he was saying, "Hey, we're good. Don't listen. We're good." I can't remember the other chick's name, but there's another girl that had got involved at that point as the CEO, and she's like, "We're fine. We've got tons of money. Don't worry." And then he just tweeted out like, "We are bankrupt," and I didn't even know how to comprehend what had happened. You know what I mean? Because I'm now in this beautiful place. I'm surrounded by all my friends, many of whom, and Bitcoin then nuked like another 30 or 40% down to like 14, 15,000. And I not only was devastated, I lost all this money, I now also couldn't capitalize on what I'd been waiting for. Yeah. And I put all that time and effort into planning, being prepared to buy the bottom, and I had that taken away from me. I was miserable. I had to put on a face because I had a job to do. I was commentating the fights. I was doing the weigh-ins. I was with my friends. You know, this is one of the first real big crypto things I went to. I hate the term influencer, but I am an influencer in crypto. So I'm meeting people who follow me, and they're like, you know, showing me love. And you know, I'm like, well, I told myself I was going to buy this fucking watch. Pardon for swearing, but I'm going to buy this watch. And so I'm trying to make the best of it, but I was miserable, and it didn't really sink in until I got home. And, I woe is me for a while, but then eventually tie up the boots. Like, we got to go. You got to make it back. And I can happily say before I even sold my bankruptcy claim, I made everything back that I lost and more. And I'm so blessed and fortunate that I even have the one skill set to do that, and two, the opportunity to do it. Because what was my option, right? What else was I going to do?
Well, what do you think gave you the willingness to do it again, as opposed to just go back to just a regular job, let's say?
I knew I could do it because I'd done it already. And once you taste it, man, like it's not even like about, like, one thing about Dubai is there's so much wealth here. It almost doesn't seem real. Like I had lunch with someone the other day, and like he pulled up, I rented a Rolls Royce Cullinan, and like, you drive this car in my whole hometown, you're the big dog.
He'll tell you off camera now exactly my conversation on Cullinans, bro.
And you're the big dog. This guy rolls up in a Chiron.
Yeah.
I'm like, that's like 5 of these. There's like crazy levels here that I've never experienced before. But you go back home and, you know, having even just a basic date just, your friends are like, you got a Rolex? I'm like, dude, this is like the watch I wear out here, because if I get robbed, I'm not like, it's not the end of the world. Dubai, it's like people don't eat like a date just, you're basically poor. But for me, it's like the wealth, the money is nice. But for me, it was the freedom, right? Like it's that fact that I'd gotten to a point where my time was no longer tied to a dollar value. Yes, I put in time in trading and entrepreneurship and all this stuff, but I had a level of freedom that I think everyone dreams of, right? Where it's like, yes, if we want to go somewhere, like we go. Like money was no longer the limiting factor in my life to do stuff that I want to do. Obviously, I'm not flying private jets and everything, but I could go take a vacation whenever I want. I don't want to trade today. I don't have to. I can live in the building, the condo that I want. I can drive the car that I want. And once you taste that, there's only 2 ways it could go. You're either like, well, it was fun while it lasted, I'm going to go back to mediocrity, or it's like, okay, I can't go back. And that's luckily where my mind went. I was like, I cannot go back to the 9 to 5. Like I couldn't do it.
Do you think it was harder to like do it the first time round when you have a lot of uncertainty and a lot more hope, whereas the second time round you have even more uncertainty but maybe less hope? But was it harder to do it the first time, or just running it back and doing it again?
I think making your first 100,000 is way harder than making $1 million from 100,000. Like starting from nothing and making $100,000 seems insanely daunting. And then not that 100,000 to $1 million is easy, right? But 0 to 100, right? Or 1,000 to 100, that's 100x. 100,000 to $1 million is only a 10x, right?
True.
So money begets more money. And so I think it was easier because I knew I could do it. I also had a network that I built. That's something that, as much as social media, I think has its dangers, the network that you can have in this space, money, Twitter, money, Instagram, trading, entrepreneurship, online businesses, is crazy. And so I was put in a position where I'm still talking to people, who are high net worth, and I was able to, scrounge up some money, and I'm now, talking to people who are still in the game, and it helped me massively. If I was on my own doing it solo and I was, in a vacuum, I think it would have been way harder. But having friends and being in an industry where other people also were affected, right? You can commiserate. Something that we don't talk about as traders, right, is like, depending on your account size, like you might nuke 20K and that's 1 hour for you. And like you go about your day, right? Oh, well, we'll be back tomorrow. I'll try it again. You tell like your friend from back home who's a firefighter or a teacher, you lost 20 grand in the morning. They're like, that's a third of what I make in a year. Yeah. So having those like-minded people that you can commiserate with for the good and the bad, I think was hugely helpful for me. And I just think I'm lucky that I'm a person that I also held an accountability to my audience. I told them on my YouTube videos, I was like, I'm not leaving. Like I'm making it all back and more, and y'all are coming with me. So when we hit 100 grand, I was so happy and I had all these messages from people. I was like, I told you guys, like, we're going to do it. And we did it. And I think I'm just blessed to be one of the people who has that, self-belief, because you need to. Yeah.
I want to end up the episode where we have a bull run right now and probably a lot of new novice investors getting interest. So for someone that's been in the space for a decade and had the highs and lows, what would be your best piece of advice?
It's not real until you realize it. That's probably one of the biggest pitfalls for people in crypto in general, is they're counting their chickens before they hatch. It's paper gains, right? I don't know if it's as common in FX because it's a lot more like you take a trade, you're in and out maybe in the same session. Crypto, there's this idea that it could go on forever. This time it's different, is what they always say. The last time was different too. And the time before that, they also told me it was different. Maybe it is different this time with Trump and the ETFs. Maybe it is. But if you make life-changing amounts of money, which many people are, and a lot of people are doing it without doing a lot of work, a lot of it is just being in the right place at the right time, taking a little bit of risk, change your life. And I think a lot of people want, well, it's 1 million now. Maybe what if it becomes 2? What if it becomes 3? Nothing is going to make you hate yourself more than round tripping a life-changing sum of money. I've done it several times where I've held something and I'm like, man, if I cash this out, I could buy a house. And now that coin is worthless. So it's not real until you realize it. Money in the bank. I love crypto. Like, the tech is amazing, but I'm in this for the money. A lot of people might be in it for the tech. I'm in this for the money. I want to be able to pay my mortgage, take care of my family, buy the stuff I want to buy. And right now, the bank doesn't accept crypto as payment. I can't go buy a car, at least in Canada. You can in Dubai. So Dubai, you can keep it in crypto, but realize the money, right? Make sure that you're taking some off the table. I'm not saying you got to sell it all, but if you're making a crazy amount of money very quickly, don't run the risk of just giving it all back, because that's going to not only be devastating financially, but it's psychologically very hard to bounce back from, seeing a huge sum basically round trip to zero. So realize some of those gains.
There you go. A wicked episode, my man. Mayne, thank you for joining and giving us the opportunity.
Absolutely, man.
There we go, bro.
Ton of fun, dude.